Hi everyone, welcome to the Talkin Tax podcast, brought to you by your host Omar Aswat, Chartered Tax Advisor, founder of ASWAT, a specialist tax advisory firm. This is episode 4 and a special episode as always with a special guest, Steven Mather of Steven Mather Solicitors, who is a corporate lawyer. Obviously, we'll understand what he does in a bit more detail very shortly. But broadly speaking, it's the Talking Tax podcast, but we've brought a legal person on here to join us today. Why? Because tax and law is very, very closely related, as you'll soon understand and get to know. Hi, Stephen. How are you doing? Thank you very much for joining us.
Yeah, I'm doing very well, thanks, Omar, and thanks for having me on. I'm not sure about a special guest, but certainly a guest.
All my guests are special, and all of you bring something special to the audience. To myself, first and foremost, I always say, from these podcasts, I'll be the one that's learning first, and then the viewers, of course. So great to have you on. How's your morning been so far?
Really good, pretty busy. I'll be honest. I had Friday afternoon off, and so playing a bit of catch up on Monday morning. But apart from that, it's been good. Thanks. Yeah, not too bad at all.
Stuff. Anything interesting this morning, or is it just the admin stuff?
Not much at all. I wish I had something interesting, but this morning has all been just a little bit of admin and catch up. It's the end of the month, so I need to get some bills in and send some bills to people and get paid. So it's nothing too exciting, to be honest, work-wise.
Good stuff. Excellent. So there are many ways we can take this conversation. What I wanted, if you don't mind, if you can just introduce us to yourself, just very broadly, and then also in terms of what Steven Mather Solicitors, what services you guys provide, and then
Yeah.
from there we can take the conversation.
Stuff. Thank you. So my name's Steven Mather. I've been a solicitor since 2000. I qualified. So what's that? 17, 18 years. And I was previously a partner in a high street type firm locally in Leicestershire. And 4 years ago, I set up my own business, and I set that business up with the intent to deliver excellence in legal services, great advice, and I really wanted to, make sure I was looking after clients. And my clients are primarily small, medium-sized businesses, probably on the actual definition, small businesses, but most of them like to think that they're bigger than small businesses. But the definition of a small business is still 15 million turnover or whatever it is. So they're generally small businesses, or some slightly bigger ones. But I found my niche in terms of my clients are typically owner-managed organisations, and those people generally want to have a relationship with the person that's giving them advice, get on with them, have direct contact with them, not be passed down to trainees, and fundamentally get good value and good advice and good commercial advice. And so that's where I come in. I act and advise on a whole range of things. So from startup to exit, although I don't do much with startups, admittedly because of funding arrangements, but from startup to exit and everything that a business is going to encounter in between. So I can deal with things like reviewing their contracts, dealing with employees or problem employees, any kind of disputes that they come across, things like trademarks and licensing, and growth, franchising, and the growth stages that companies go through, and then ultimately to exit. And exit is what I tend to do most of, helping businesses to exit out the business, sell, or on the other side, buy and acquire people that are exiting out businesses.
Excellent. Thank you very much for the background. Just a quick question before we continue is that it seems like, am I correct? Oh, it says at the back. I was actually just going to ask you. It seems that you specialize across a few different law, pieces of law, right? As in corporate law would be the buying and selling of a business. But then when you mentioned employment and those sort of issues, that's employment law, right? So how does that all sort of come together? Or is it different qualifications that you guys have to do? Or how does it work?
Not really different qualifications. It's mostly just the combination of all of those years of experience. So at when you study at university, yes, you do some options into different areas of law that you want to do. So you have to by mandatory do some crime, but I never did anything else in terms of the very basics in terms of crime. Family, never interested in. Wills and probate, just never interested. I was always just interested in businesses and doing business law. That does separate out into different into different things, and it's one of the things that I always think my profession has worked towards. These specialists. So you do have people that are really ultra specialists, and they only ever do not only just corporate transactions, but do corporate transactions in one specific sector. And the higher that you go in terms of the larger size of firms, the more specialist that you'll get. My experience working in a relatively straightforward high street type firm was that I picked up pretty much anything that came in that no one else wanted. So we'd have a department for wills and probate, family, conveyancing, those kind of things. But then anything that was relating to the business side of things was me. I picked that up. I trained and qualified in a purely commercial firm, so I only did commercial work, corporate commercial work. And then as a partner in a law firm, then just picking up whatever those businesses needed advice on. And having run my own businesses in the past and being a partner in a law firm, running a business, doing that. So I've got a lot to bring to clients in terms of my personal experience, commercial side of things, and those other bits and bobs. So yeah, I've done lots of experience. I've got some qualifications as well, as you might imagine. So you have to, go on some courses to learn about X, Y, and Z, and you have to continually develop and continue your learning. But it's, I would say, more to do with the fact that, I just have lots of really wide experience, but also really deep experience. So there's generally not something that a client will come to me and I don't know how to sort it, or if I can't sort it, know who can. Know who's the right person to speak to. And I think that's always really important with clients, is knowing what your limits are. And indeed, like with you and tax, there's always, on every transaction, there's always that situation where I go, I think I know, but it's not for me to advise. I'm not insured to give tax advice, so we need to get a tax advisor on board to give the actual proper advice.
Exactly. And in terms of from the opposite angle, which is that sometimes I have clients asking me certain questions where we have to simply tell them that this is a legal question. And I think sometimes clients, business owners, the general public, they don't understand the divide. Obviously, we do as the professionals
Yes.
working in the industry, but it's very easy to not understand the divide or mix the two together. So, okay, if we're advising on a restructure of a company, that's fine. We can advise on the tax aspects of that restructure. But in terms of how it's actually, obviously, as you say, over time, we start to, as in, I
You
start to
see it over time. You've got the idea. Yeah, absolutely.
comment generally on the legal aspects, and you'd be able to comment on the tax aspects. But it's not something we can sort of confidently say, yes, this, and this. And that's where the divide comes in. What I wanted to do is speak more about if we pivot the theme into the selling of a business, because that's where the tax, there's a lot of tax related to that particular life-changing transaction. And as you specifically mentioned, you like to be involved with the business owners quite closely. I think that's very important. And that's something we try to do as well when we're providing tax advice, which is have that holistic approach whereby you're actually involved, not just write up a report, prepare a few documents, and then send it out. Just more around the whole conversation. So I was thinking if we can discuss more from the selling a business perspective. I'll provide some generic insights on the tax, but then it'd be very interesting to understand what exactly the lawyers actually do in such a transaction. So, pre-sale, during the sale, and then post-sale as well. And then it'd be good to hear some interesting stories. I'm sure you've come across some, deadline day, I don't know, disputes and the rest of it. So from a tax perspective, just very broadly, tax advisors should be involved quite early on in the process. Why? Because when we're looking at pre-sale, there are certain things that can be managed quite well. For example, pre-sale structuring. Is the structure fit for purpose, fit for sale? Or are there particular assets? Are there particular assets within the group, within the trade, that a potential buyer would not want to acquire, for example? So there might be some commercial assets, a factory, a warehouse, an office building, or as business owners, sometimes, if they're stuck with the day to day, then sometimes business owners, they end up buying property, residential property, personal long term assets, and therefore buyers won't always want to purchase such assets, and sellers won't want to sell. So it's important to have
Yeah.
the tax advice from the start, and then also other things such as valuable reliefs, ensuring, for example, business asset disposal relief is available. Drafted the agreement whereby the owners selling the business would be resigning the day before the sale, the day before the
Really.
sale. Yeah, I came across that, and effectively you lose BADR. Why? Because you have to own the shares up until sale. If you sell the shares the day before, then it's absolutely, it's catastrophic from a tax perspective. You're paying double the tax. So I've seen that kind of stuff as well. But in terms of from a lawyer perspective, a commercial lawyer perspective, take us through the journey, as in when would a client up until sale, and then obviously you have the sale point, and then the aftercare as well.
Sure, yeah. Generally speaking, most clients, I would say, come to me when they've already found a buyer. I would say that's the vast majority of the time. Maybe something like 75% of the time, maybe even higher than that. That they've already had an offer. They've come to me. Out of those people, I would say, in my experience, my caseload, maybe only a third of them have probably got advice at that stage, pre-sale. Sometimes you have the bigger the organisation, the bigger the operation, the more likely it is that they've got a decent set of accountants. And within that practice, there might then be some tax advice being given. But you see, I still see people that are selling for £1 or £2 million, where their accountants are not much more than bookkeepers, and they're not doing a huge amount more, and so they've not really had any kind of advice. And in any scenario, in any situation, my advice is always get some tax advice. And it has to be the starting point of any transaction. If they've come to me and they've already agreed their heads of terms and are already at that stage, then I will still say, hey, look, you should get some tax advice. But it's a little bit too late. You'll be telling them what they're going to have to pay rather than what they could have done had they come to you earlier, and don't want to make them feel bad about it. But yeah, they'll come to me, and I'll always say I'm driven by the tax advice, and explain it like this to clients, because realistically, as a lawyer, I can put into place any structure that somebody wants. That could be a very simple transfer of shares from one person to another person, or it can be done by way of like a demerger out of certain assets out of a business and then selling the business, or putting in place a holding company to buy the shares. So there's all those different options that are available in buying and selling a business are all tax related. They're all driven by the best tax planning. And I say to my clients, let's do that first and make sure that what we're doing is right for tax, and then we can put in place the right structures around it. And I think that's that has to be the right approach. Very often that hasn't happened, and clients come to me and they've accepted an offer and that's it. And it's kind of like, I can see and identify that there was a better way of doing this. But again, it's not necessarily my job to point out alternatives, because I'm not insured to give the tax advice. But it is what it is. But as I say, probably most of the time they're going to come and I'm going to say, have you had tax advice? Has somebody actually sat down and looked at this and worked out, yeah, this is the best way of doing it? And if so, then yeah, we're good to go. And as I say, most of the time they've come, if they're of a certain size, they will already have spoken to their accountants. Their accountants may have even been involved in some of the negotiations and drafting up of, letter of intent, or reviewing the letter of intent or heads of terms or something along those lines. Where they've not, and they've not had, or they've got an accountant that is kind of a bookkeeper, my strong advice is always to think about getting someone that has more of a corporate finance background from an accounting point of view, because there's going to be some accounts that need to be sorted. And some issues on the tax and accounting side of things, and also if they can't then do the tax advice, get actual specific tax advice from someone like you. In terms of the processes, as I say, most of the time they're coming to me once they've already got a buyer, and generally the sale of a business is driven by then the buyer. So as a seller, obviously you want to put in place, have your own tax strategy to optimize it, but the buyer is also going to be doing that in a way in which is optimal to them. So it's trying to work together to make sure that it works for both sides. The buyer then will generally drive the initial set of documentation. So the buyer will be raising questions, due diligence information. So that will be on the legal side of things. It might be on the tax side of things and the accounts, financial DD, they call that. And it might be operational, some actual hands-on stuff that's not quite the legal. Typically, the legal and the operational gets mixed into one document, if I'm honest, unless we're doing some really big transactions. Most of the time it's in the legal side of things. So I'm answering some legal questions for the client and then going back to the client and saying, well, you tell me what you're doing on a day-to-day basis on these things. And then the financial DD, hopefully, is being picked up by somebody that knows what they're doing. Because if it's not, then it will be often the client working with their sort of basic accountant to mangle the way through the DD questionnaire. DD is all about, as far as I'm concerned, all about providing as much information as you can to a buyer and not, being transparent and honest and open. That's the way I deal with things. I'd always be transparent, honest and open and act with integrity and those kind of things. And so I'd ask the client to do the same. And sometimes they do. And sometimes perhaps they don't give you the full story, but I always try and push for the full story, make sure that we're disclosing it's there in their best interest. And the reason for that is twofold. One is you need to, if you put yourself in the buyer's shoes, you want to know everything about the company that you're buying or the business that you're buying or the assets you're buying. You'd want to know. So, it's only fair that we provide them with that information. But more than that is it reduces or eliminates any potential claims being brought by the buyer. So within the transaction documents, share purchase agreement or asset purchase agreement typically, within those documents there's always going to be a whole raft of what are called warranties. Warranties, for people that are listening at home, are statements made by a seller about the company. And they're all true. So the buyer is saying, we're relying upon you making those statements, and we're going to take them all as being true. And if any part of them are not true, then it's the seller's duty to say, hey, look, that's not quite true. So as an example, one warranty within the SPA might say something along the lines of, there's no current litigation against the company, no complaints, no cause for concern in relation to any disputes. And the buyer says, yeah, that's true. There's no issues there. And then the buyer buys the business and finds out that actually there's, the seller had received a letter of claim for £1 million because of some serious issue and he hadn't mentioned it. Now, in that scenario, what would happen is the buyer would turn around and say, well, hang on a minute, you didn't mention this. If we'd have known about this £1 million claim, then we might not have bought the company, or we might have paid less because we've got to factor in something about this £1 million claim. Or we'd have put in something into the SPA that says, well, if there is any claim that's uninsured, then we're going to come after you, Mr. and Mrs. Seller. So warranties are really important, and I always work with the clients in quite a lot of detail to go through those warranties, make sure that we're accurately providing full and complete disclosure of information that touches upon or affects any of those. And then carrying on with the process. So that's within the share purchase agreement or the asset purchase agreement. They're the two main transaction documents that we'd have. But again, depending on the structure that's put in place, there might be some other documents that are around that as well. So if there's any kind of earn-out, the earn-out being you don't get paid all of your money up front, it's going to be some element is deferred and conditional upon certain profit targets or turnover targets. That's an earn-out, so there'll be some provisions about that. That might entail a consultancy agreement or an employment contract with the company if the seller is carrying on doing some work for the business after completion. There may be some just straightforward deferred consideration, some amounts that are being paid at a later date, in which case there might be things like loan notes being put in place, or even a loan agreement and a debenture or charges over the business or over shares or personal guarantee or whatever it might be. So there's always some structural issues that surround the key transactional document. And then tax advisors like you sometimes come up with something a bit more complicated in terms of how the process might work. So there might be a holding company that's going to come in as the buyer and buy it, or as we talked about, there might pre-sale, there might be a demerger out of the business so that the company is a bit cleaner to sell for whatever reason or some other important reason. So we might have to do that before we get to that sale stage. And hopefully the best bit, particularly of acting for sellers, is that it all goes through relatively quickly and smoothly, and I send them a load of money and then they can go and enjoy the rest of their life and retire or go and buy some new businesses or whatever it is that they're looking at doing.
Excellent. Very, very insightful. Thank you very much, Stephen, for your, taking us through that journey. In terms of a few questions come to mind. In terms of, I think it's fair to say that the tax advisors would usually be involved before the lawyers. And as you mentioned as well, one of your first questions is, have you received tax? Have you obtained tax advice? And that's where we agree, in the sense that the tax advisors would come in. And the reason tax advisors should come in earlier on in the process is, for example, one simple example is the fact that certain reliefs, for them to be available, for example, you have to have held the shares for a certain amount of time. It's always good to obtain advice. I'll just give a few pointers out there for the listeners in terms of some of the things that they can consider. You mentioned the demerger route. That's something that it can come up, and it's fairly common just because of the day-to-day runnings of the business. But then, as you mentioned, a potential holding company, and the reason for the holding company would be potentially to obtain a very valuable tax relief, the holding exemption, which effectively the holding company, once it's inserted above the trade, the holding company sells its shares that it owns in the trading company for no capital gains tax, provided that conditions are met. And then obviously the proceeds don't come into the seller's hands. The proceeds will be sat in the holding company. So that's just a back and forth that needs to be dealt with. There's also other sort of planning, for example, million. And if that 1 million is available, as in whether it's available or not is the first question, but there's always spousal transfers that can be considered. For example, bringing the spouse into the business as a shareholder, and therefore you have 2 million at 10%. So these are just general tips, very broad and initial tips that tax advisors can, the value that tax advisors bring to the table. And then there's a lot more. We can, start expanding further out in terms of, the tax advisory space. In terms of the...
And of course, in an ideal world, Omar, in an ideal world, somebody that was looking at selling a business would come to us probably 2 or 3 years before, maybe more, and sit down and say, look, I'm going to be exiting, and this is my plan is to exit in 5 years' time. What's the best structure to put in place right now? What's going to be the most efficient way of doing it? Because then you've got time to go, okay, well, let's add your wife in as a shareholder if we can meet the certain eligibility requirements, and then that means that she will have held the shares for the appropriate amount of time when it comes to actual sale, rather than someone thinking of it the week before the transaction is due to complete and then turn around and go, oh, can we do that? And you go, no, it's too late for that.
And I think the other key point to mention there is that, yes, you bring the wife in as or the husband in as a shareholder, but then there are other conditions as well that need to be satisfied for business asset disposal. For example, the spouse might become a shareholder, but they're not an officer or an employee of the company. So then, you have to manage that as well. So yeah, in terms of, the week before sale, asking the lawyers as well, not even asking the tax advisors about, these sort of things. It doesn't make sense. So I think the
Yeah.
key point there to take away for business owners that are watching would be to seek advice as early as possible. And for the accountants of such business owners, again, you mentioned quite fairly at the start, which is we should all know our own limitations, which is that, okay, this is not something that I'm familiar with. This is not something that I've dealt with before. And therefore, let's seek some advice, even if it's just an initial chat, right? I'm pretty sure you have these chats sometimes, there's
Yeah.
general chats whereby just adding that value. And then if the client wants to go ahead with you, then it's a different story. So, okay, that's very interesting. In terms of just a very short question, but what is the lowest and the largest business you've dealt with, as in terms of value? So the lowest value, and then how high up have you? High up, as in obviously the work generally stays the same, right? Broadly speaking, but the larger business would obviously
Yeah.
have a risk and the rest of it attached.
That's right, yeah, and it's always difficult to therefore quote for business sales that are really quite low, because you're sitting there going, well, okay, you might only be selling for £60,000, which is a lot to that individual, but to me as a lawyer seeing £1 million plus deals, it's not. And at the same time, making a fee that is proportionate is hard, because, well, there's still a huge amount of work to do. So I tend to do is on those smaller transactions, it's more hands off, and it's kind of helping the client through certain things, and maybe just focusing on the core documents and reviewing that, rather than getting stuck in with the the due diligence exercise and going through all of that kind of process. So the smallest deal in the last 4 years, the smallest deal that I did was, I think, probably about 25 grand, if I'm honest. A tiny deal, and for somebody that I knew, and so it's kind of like, yeah, and I'm like, okay, well, it's far below what I normally do, but I'll kind of help you out. The biggest one that I've been involved in was about 12 million quid. Something like that, and that really is my sort of where I found my little niche. So there's realistically sort of between on average between about 1 million and about 5 or 6 million, something like that is my kind of niche, because beyond that, they, as an organisation, as a company, they're probably already using sort of big level accountancy practices. They're probably therefore already using sort of big corporate practices that have lots of lawyers, and indeed they probably need it as they get to doing sort of deals over about 50 million quid. The amount of issues and the involvement that you need a full team, and I'm not that person to be able to deal with that. But for my clients, the people that I pick up, generally, as I say, owner managed businesses, and they want they're so hands on in the business that they're the ones that we're dealing with. They're the ones that know and have all the answers to the questions. So I sitting down just with them, and they dealing with me, and it's those clients that sort of really appreciate that level of service. So yeah, on average, a few million quid generally seems to be it, and it's a nice niche for me, because there's lots of even the sort of the better known regional firms, shall I say, the ones that that have the expertise to do the corporate transactions, would probably look down on a £1 or £2 million business sale, because it's a bit low for them in terms of their fees. They realistically are looking for sales that are 10 plus million and maybe going up to 100 million, and that allows them to come in and go, yeah, the fees 70 grand or 100 grand or whatever it might be, and actually, yeah, great, that's good for them, but it also means there's a bit of a gap in the market, where people aren't able to get really good quality advice from a corporate level, and get a fee that's sensible. And what I have found is that the only downside of that marketplace that I play in is occasionally you get somebody that's not really experienced not a very experienced buyer of legal services, and so they're a little bit naive to just quite how much a transaction might cost. number one. So they come and say, look, I'm selling a business for 5 million quid, and the fee quote might be, 50 grand, let's say, just pluck a figure out the air. And they're kind of going, oh, right, what, eyes wide open, thinking it might have been a 1,000 or 2,000. And you go, no, there's quite a lot of work. Yeah, exactly. There's quite a lot of work that's involved. Now, generally speaking, those people can then start to understand, because if they're then doing a shop around or anything like that, or speak to their accountants or whoever, and they go, yeah, that's going to be the right ballpark figure, and they go, okay, well, we're fine with that. You see, on the very low end of the marketplace, there are still sort of the high street solicitors that will pick up sort of basic stuff. So, I had one, this was a few years ago now, but I had one where they were selling for a few £100,000, not a big deal at all. And I think I might have quoted maybe something like 6 or 7 grand, something like that, which is me trying to cut cost as best I can on a deal of that sort of transaction size. And they came, didn't instruct, and I always follow up sort of leads. And after a time, just say, look, if you've gone somewhere else, it's okay. I'm not going to be offended. Just let me know, and I'll stop emailing you. And they say, yeah, look, we've using someone else. And I always say, do you mind me asking who it was, and what price you paid? And very often, actually, people will tell you, because they think they've got a bargain. But I had one, and on that particular one, and they'd found somebody that was prepared to do it for like 750 quid. And I have to kind of turn around and say, that is a couple of hours of work. But in reality, to help on any level of the transaction is going to be, even if I was just reviewing the share purchase agreement, it's a minimum really of like 10 hours. And so I just kind of look at that and say, they're not going to get any kind of service out of that solicitor that they're expecting. There was probably no benefit of instructing a solicitor, because they're just not going to get the advice that they need on that kind of transaction. And so that would be, just a point for anybody that's looking at selling a small business, would be to start to realise that there are costs attached to it. Yeah, of course, there's cost attached to getting some tax advice, getting an accountant that's involved and in the tax side of things, and the financial side of things. Sorry, not tax side of things, and then getting a lawyer involved. Of course, there's costs involved. But if you're selling for £1 million, as a base point, and you're paying 50 grand in fees, then that was worth doing. It was really worth doing as a very small percentage. And obviously, as you sell for more, and the fees are then a smaller percentage, it's definitely worth doing.
Completely agree, and very, very interesting. I was quite surprised when you said 750. I thought because I think last time when we spoke on Zoom, when we just had a general catch up, you mentioned another story where you quoted X amount and the other firm quoted like triple the amount. So I thought it was going to be something similar in terms of the story. But this is
see that as well. Yeah, absolutely. Yeah, I do see that. And look, it's pricing of jobs is, in any kind of small business, never mind professional services. It's always a tricky one, because you've got to you be pricing in accordance with the time it takes. Number one, right? I don't work on an hourly rate basis generally, but I'm still factoring in how long it's going to take me. You also then need to factor in the complexity of the job. You have to factor in the value of the job, because ultimately I've got insurance to cover things, and the higher value, the more insurance proportion that it is. You got to factor in, any kind of things like urgency and how quickly someone wants it. But yeah, pricing is always difficult to get right. I'm always surprised. I can quote a job. I had, like you said, I'd quote something, and then they come back and say, we'd like to go with you. I tend to ask clients that even at that early stage, if they've said to me that they're going to go and get some other quotes, I'll tend to ask where I was in terms of the quoting scale, just to give me an idea of what it might be in the future. And yet, always amazed that some firms would quote, 2 or 3 times more than where I'm at. But, they have nice shiny offices and baristas in the reception area with a coffee menu to hand out. And so all of that costs money. All of those overheads cost money. Yeah, exactly. It all adds up. And if you're running a big, even sort of a mid-tier regional firm, into you've got a nice sexy office in the middle of somewhere on a business park, it's costing a lot of money to run that and have all the staff, and you've got to feed all of that. So I do understand the pricing, and the flip side of that is I'm not cheap. I'm not there being the cheapest. I won't. Very unlikely there'll always be somebody that will be cheaper than me, because you just won't get somebody that knows what they're doing, or you won't get the service, or whatever it is. So I'm not, on the same time, I'm not cheap. But if you compare me with my effective direct regional firms, dealing with corporate commercial work regularly, then yeah, I'm probably going to be cheaper than them, because I don't have the offices and the staff to.
Exactly.
And the same, I guess, with you. A client could go to PwC and get some tax advice and pay 125 grand for it, or they could come to you and pay 10 or 15 and get the same advice, or maybe even better, from you, and pay. That doesn't mean that you're going to be it's not, you're not doing the tax advice for 100 quid and saying thanks very much. It's still priced appropriately.
Exactly. I think it's very similar in the sense that, as you exactly described, which is, the perception of the firm and the rest of it. I think one thing where we can stand out is the fact that we can provide that personalized service, which you won't get with these firms. So you'll be paying 5 times more, 10 times more, but as you say, you'll end up dealing with a trainee. And that's probably the USP of firms like ours, whereby we'll be charging a little less. We're not the cheapest, for sure, and I always make that clear as well. We're not the cheapest. However, you will get that personalized experience, and then it's up to the business owners to decide what they value more, right? And for me, it's more like a no-brainer, because you're paying less fees with us, and you're also getting the personalized service. But sometimes it's just that whole perception thing when it comes to value and pricing and the rest of it. Just a comment I wanted to make in terms of your niche, which is, that whole scale of 1 million to, say, 12 million, or even 6 million, 1 to 6 million, 10 million. That's your niche. And I think it's important for all of us to understand that niching doesn't necessarily mean a service. I think sometimes people get that twisted, which is it has to be a service. Your niche, it's a large service, but then your niche goes in terms of the market value.
Yeah, it's a good point. Yeah.
So
It's a good point. I think we do traditionally kind of see niching down as being, I act for people that are selling, veterinary practices, or something like that, and you go, well, actually, when I look at the deals that I've done, healthcare, I've done engineering, construction, online, like every sector. Because do you know what? Actually, I've got all the experience in all of those. I still know what I'm doing in all of those. But yeah, it's that you're right. The niche for me is probably the client who I'm dealing with, more than their business. If that makes any sense, my niche is almost acting for. I've said this before, like business owners, particularly on the sales side of things. Business owners are vastly experienced. They know what they're doing. They've been running their business for a long old time. They know their industry back to front. They've got all their hands on the business. They know everything that's happening day in and day out. They've got really good control. But you know what? They've never sold a business. But you get them to try and admit that they're a bit green on that and a bit sort of naive. He's always a bit reluctant, because they're expected to know all of the stuff. And actually acting for clients like that and allowing them that opportunity to go, yeah, I kind of read it, Stephen, but I didn't really get everything. Can you take me through it? And I think that they're the kind of clients that I really like acting for. Just nice people, but ones that are sharp cookies. They know what they're doing, but they've just maybe never done it before. And that's where I can really add value. I can bring in not just the legal side of things, but some commercial aspects as well, and help them through it and guide them through it, so that they come out at the end of the day and go, yeah, do you know what? Actually, I'm really grateful for that. And the fee at the end of it is not a consideration, because they've enjoyed the process. They've got a lot out of it. They've got the value out of it. They understand what it is that they're entering into and they're signing. I had one guy who said, just recently, was selling a recruitment type business, and his he was, as most people are, working from home, got the Teams call on, and his wife is in the background and not playing an active role in the conversations, but overhearing stuff. And he later told me that his wife, in her day job, has had lots of interactions with lawyers, over the years, and he said that she said, my explanation of things and my dealing and handling of it was the best that she's ever come across, in terms of just taking the time to explain it with the clients and taking those complicated things and making them easy to understand. And that is what I've always aimed to try and do. Take something that's really complex and make it really simple. Primarily because I'm not really very good with the complex stuff. My brain's too small, right? So I take the complex things, distill it down into something that's easily understandable, and then I can talk to the clients about it.
Excellent. So effectively what you've done is you've completely flipped the niche from a service into the customer. So your niche is actually a customer. And again, people, they won't generally think of it like that. For example, even on LinkedIn, on the tagline, I think generally, this is my assumption, but people would try to put a tagline whereby they're trying to show their niche, and every tagline would be around a service, a particular service that they're targeting. But as you say, you work with recruitment, healthcare industry, whatever it may be, but it's around that customer, which is new to the process, which is very, very interesting. Stephen,
Yeah.
are you okay for time to go over 2 p.m. or
Yes, I'm
how
good. Yes, yeah, I'm good.
okay. No,
Yeah,
because
I'm good for
I
time.
do want
Yeah.
to discuss a few other points, sticking to the topic in terms of tax and legals on a business sale, but also I want to discuss work-life balance, because we've touched upon that before as well, and I think viewers will find
Sure.
that interesting.
Yeah.
Before we go on to that, now in terms of when it comes to tax advisory, what we do is, generally speaking, or 80% of the time, we'd probably quote a fixed fee. So we'd assess the situation, as you mentioned, value, complexity, urgency, what exactly is involved, understanding the situation first, and then quoting accordingly. We'd usually charge a fixed fee. Yes, that the whole hourly thing is in your head, is always in the back of the mind. The percentage is always there as well. Broadly speaking, how would you charge for your services, broadly speaking, and then how does that compare with the larger firms in your
Yeah,
industry?
sure. So I pretty much only work on fixed fees these days. There's very rarely stuff that I do on a kind of hourly rate basis. And if I do, generally the clients get great value, because I don't, I'll let them off a lot of stuff, right? So I kind of don't properly record the time as well as I should do, which is the other reason why I don't do hourly rate stuff. So most of the time it's fixed fees. If it was a business sale, for instance, I would tend to work on a percentage of the overall value, but then build in additions or subtractions depending on the matter. So if it was something that was, as an example, so I've just done a management buyout for £4.5 million, where they both come on and they're both dead happy, like we don't need anything too complicated, we're not too fussed about X, Y, and Z. They apparently have already got some tax advice on some part of it. I'm not sure they have, but let's run with what they said. And here's the fix. So if I was selling a business for £4.5 million, because I've got an external third party, the fee would probably be somewhere like 30-40 grand, let's say, something like that. But on the MBO, actually, we're going, well, don't have to do DD, don't have to do this, don't have to do that. So it was a lot less, I think 10, 12 grand, something like that. So the starting point on a sale is always, for me, going to be a percentage, and then looking at the other things. So looking at, well, is this more complex? Is this more urgent? Is there some other issues that I'm already aware of that I can build in and factor into the quote? And it's lots of lawyers don't do that, and because there's quite a bit of work that's involved in scoping out a fixed fee, because you have to actually sit down and work out what it is that you're going to do, and then write that down effectively. But once you do that, it allows me that opportunity and the client opportunity to know that that's what they're going to get, and then if there is some extras, then we can sit down, and I'll always say to the client, if there are going to be some extras, I'll know about it before we do the work, and then we'll sit down with you again and we'll say, look, okay, we need to do this now. That's over and above what we quoted for because it's not written down in the quote, and it's going to cost X to be able to do that. So there's always fixed fees. In terms of how other firms work, my experience of it is, from what clients have told me, is most firms in the corporate world are working stuff out on a nominal hourly rate, but then giving clients a window of a quote, a scope, a range of a quote. But generally speaking, we'll always know if someone gives you a range of a quote, you can be pretty sure it's going to end up at the higher end of that quote window. So if somebody says it's going to be between 15 and 20 grand, you can pretty much know it's going to be 20 grand, and it might even be more because they turn around and go, oh, it's a bit more complicated. And I always say to clients, if they ever do shop around, and not many do in fairness, but if they are shopping around, there's a couple of things that are big red flags to me. One is the time it takes for someone to give you a quote. I would follow up a quote, maybe a few days later, and they come back and say, oh, I'm still waiting for some more quotes to come in. I'm like, but it's been 4 days since we spoke. You had a quote the same day from me. Like, what kind of service are they going to provide after they've bagged the job? Right? If they can't get a quote out to you. So number one is how quickly they get a quote to you. And number two is the fact that they can't give you a fixed fee for something that they're telling you they've done before. Now, I've done transactions before, and I know what can go wrong and what can go right and how quickly and all those steps that I need to do, and I factor all that in providing you with a fixed fee. Why can't they do the same? Have they not done it before? Has this firm never done a business sale at 4 million quid? Because they just lawyers go, well, there's it's knowns at this point in time, and we don't know quite how it's going to go and where it's going to go, and that's just lawyers going, well, I'm going to tell you it's going to be 20 grand or 15 to 20 grand, but actually it might end up being 25 or 30 because I'll say that there was loads of extra work. And by that point, they've got you over a barrel, of course, because they've done all the work and we're due to complete, and the 3 million quid's hit their account, and then they're turning around and going, well, our invoice is going to be this much. And that's how lots of, sadly, there are still firms out there that work on that kind of basis. They shouldn't do, because the SRA regulations require us to be transparent and upfront with costs. But the hourly rate is just not a transparent approach to costs, in my opinion.
I completely agree with you in terms of the whole hourly versus fixed. And I do occasionally get clients asking, like, what's your hourly rate and the rest of it. And most of the time, I would probably say 95% of the time, I'd turn around and say, we work on a fixed fee basis. So how I mentioned earlier, 80% of the time is fixed fee. I would say the other 15% or close to 20% would be on a contingent. It just doesn't make sense to me anymore. And it's surprising that it's the larger firms, the big corporates, that are still, we could say behind, right? if we be honest.
Absolutely, yeah.
It's our opinion. Yeah. But
it is easier for them. That's the thing, particularly for the bigger firms, and you've got staff. You can just give an idea about how much it is. You're forcing your staff to record time and fill in the timesheet, so there's a record of the time that's been taken, and then you can get to the end of the matter and go, oh, actually, we spent 200 hours on this instead of the 100 we thought we would, and therefore the bill is going to be higher. But certainly, my clients all really appreciate the fixed fee approach. All like knowing exactly what they're paying up front, and a lot of them have had bad experiences with surprise bills. I eliminate all of that.
Exactly. Excellent stuff. In terms of, just a quick one to touch upon, in terms of employee ownership trusts, have you dealt with any of those type of sales? Just because it is becoming more and more popular in the land, and the tax benefits are quite beneficial. I always tell clients that don't just look at the tax benefits, which is a CGT free sale, free of capital gains tax. Obviously that's the headline act when it comes to incentivization, in terms of the rules and the legislation introduced in 2014. It shouldn't be the only thing that one is looking at, but broadly speaking, a business sale to an employee ownership trust has a lot of advantages. For example, you're not having the back and forth with the buyer in terms of the due diligence driving the market value sale down. Effectively, the seller is on both sides. So you're selling your stake, but then you're also technically on the other side as well, which is, you're on the side of the employee ownership trust, which is going to buy out. Obviously, the disadvantages there would be, for example, you won't get full consideration. But generally speaking, these days, the earnouts and deferred consideration is very, very common, right? If I'm not mistaken.
Yeah.
So that sort of balances that out. But I think the headline act would be, from a tax perspective, no capital gains tax on a sale to an employee ownership trust. What's your experience with that? Is it becoming more popular? And how does your work differ? Or would you say your work is still generally very similar in comparison to an MBO or a third party sale, for example?
Yeah, most of my work has been third party sales, some occasional MBO kind of work. I've had a couple of people sort of interested in exploring EOTs, but then at the same time comparing them with their third party offers, they decided to go with the third party offers. So I've not personally done an EOT myself. I know some of my colleagues have picked up some of that work, and I know that tax advisors generally, because it's advantageous, are always keen to say, well, here's an option available. But yeah, I've not done one myself. The other option was that I've also had tax advice on for clients is just a straight up, liquidation, MVL kind of going, rather than selling the business, they've got a stack load of cash that's tied up in the business, and they go, actually just want to close it now, and end up, and they sometimes think that that's an easier and it's cheaper and easier and less hassle than going and finding a buyer of a business, particularly, one that's owner managed with few employees that might not stand on its own 2 feet afterwards. So I think the point is that there's lots of different options available, and if someone is out there and they're thinking about selling a business, so they're looking at exit plans, their exit strategy, then the sooner that they get advice on it, the better. And also the better, because they can have a look at the whole range of different options that are available and work out which one's best for them.
Excellent. Thank you very much. We'll move on to the work-life balance angle. Just a quick one.
The more interesting side.
How many employees? What's your setup like right now? Is it yourself and then subcontractors, or is it you have some employees in house?
Yeah, so for me, it's myself. I have my own business as a consultant solicitor. So I work with my clients, and I work with other law firms' clients as well. Where I'm working for other law firms' clients, we're typically doing that under their insurance, occasionally under my firm's insurance. And because I as an individual, or my company is not a regulated law firm, all work that has to be done through a regulated law firm. So I work with a platform called Nexa Law that offer all of that compliance and regulatory side of things to it, so that the client's always going to get authorised and regulated law firm acting for them, albeit me doing the work on a day-to-day basis. So I don't have any employees. I've done that in the past. The firm that I used to be a partner of, we'd have probably about 50 staff. So I've managed staff before and ran staff, and certainly understand that it's not all that it's cracked up to be. It comes with its own issues and problems. And so setting up was never about me sort of really trying to replicate what had happened before. I was always keen to do something differently, and the doing it differently was in a variety of different ways. But one, staff wasn't really under the agenda. Two, I read a book that's called Company of One. I can't remember the author, but called Company of One. I'll send it to you. You can put it in the show notes. But basically, not necessarily about being a sole trader, but about the myth of growth for growth's sake. So we're in a society and a culture that generally says that you should grow your business, grow the turnover and just keep growing and growing. But actually, the book is based on, rather than growth being a financial thing or a monetary thing, growth being an individual thing, and just being better. So what can you do to be better the next quarter? What can I do that delivers a better service rather than one that's just bigger? So it was a really, really interesting book. So I took that and a number of other things, and I realised that actually I'm better to provide the kind of service that I provide without the hassle of having offices and staff to worry about, management of a business, to take all of those things out. And now all I do is look after clients. What that means is generally I have a little bit more time. Rather than doing 60, 70 hour weeks, I might only be doing 30, 40 hour weeks. But that means I have a lot more time to spend with the family, to do hobbies, and to enjoy life and be happy about it. I'm now absolute convert to the philosophy that happiness should be put first. I'm in the process, in actual fact, of writing a book. I've just registered the trademark, Happiness Over Everything. Not quite everything, because you and I are wise enough to know that there's some other things that are more important than yourself. So it's not from a selfish point of view. There's other things that that do provide happiness and that you should care about. But in terms of most things, what we don't do, and we generally don't do, and lots of people sacrifice, particularly in my profession, is that they sacrifice money for happiness and time for money, and the two things are correlated. In my book, people will use that phrase. You'll have heard the phrase, a really common phrase, time is money. In my profession, time is money. We sell time. That's what I was taught at one point. We sell time, and it's like we don't. And once you get to that track, all that you can ever do is sell more time and make more money. And while money is good and money makes the world go round, Zig Ziglar, the American motivational speaker, said something along the lines of, money is not the most important thing in the world, but it is as close to oxygen as on the must-have list. So you do need to have money and finances to live and get by. It isn't, and it shouldn't be one's main priority. In actual fact, happiness should be one's main priority. And so approaching my job movement from away from being a partner in a law firm to setting up business, now my first port of call is what's going to make me happy. What's going to make me and my family happy the most? And sometimes that might be taking on that big job, because that's going to help me pay the bills and go on holiday or something. But there's times where I might turn around and say, do you know what? Actually, I don't feel the vibe with that client. I don't feel like we'll get on, and I'd much rather get on with the client and enjoy the matter, have a laugh and a joke. I'm more than happy to do that, and have some fun in the process, as well as being ultra professional and slick and doing the job properly. But if I'm not having any fun, I'm just going to get bored, and I'm not going to enjoy it, and I'm going to regret. So happiness for me is really, really important. And so when you look at the life-work balance, or I flip it the other way in actual fact and call it work-life balance. No, the other way around. Instead of work-life balance, is what most people say, I call it life-work balance, because life should come first and work should, is sort of secondary. Most people don't do that. Most people do work and then try and fit life in. Harvard did a research piece into it and decided that instead of calling it work-life balance, they should call it work-life blend. That's the modern 21st century approach to it, that actually people are blending. I'll raise that up a little. People have got work and they've got life, and that they should blend it in together, so that and working from home's helped people. They can go and take the dog for a walk, or go to the doctors, or pick up the shopping or whatever, and it feels a little bit better, but it's still work is dominating, work is leading, and I think work is really important, but life is more important. And so you've got to prioritize those things that are really important to you. You've got to prioritize. Jim Rohn, the American motivational speaker, I've read too much of those kind of books, you might imagine, but Jim Rohn tells the story about a man with his child, and he says my child is my why. That's why I go to work, and the bottom line is, well, if you were really wanted to prioritize spending time with your daughter, then you would do that, and you'd look at your diary, and it would show. Because your diary would go, block out this date because I'm spending time with my daughter here. Block out this date and doing this and doing that, and so that's how I work my diary. My diary has all of those things in, and if I've got taking my son to the doctor's tomorrow, and that's in the diary. And there's nothing that's going to come in that's going to take that away. Or if we're going to play tennis, for instance, I pick him up from school and then we're going to go on to tennis. The only time that something is going to come in and say, I'm going to take that time away from you, is if some client comes along with the magic mystery money amount. Now, nobody knows the magic mystery money amount, but it's really quite a big figure, because I don't want to disappoint my kid by not doing something. And there was an anecdote that I read, which always kind of impacted me. The son says to the dad, Dad, I know that you're a lawyer, and what's just wondering what your hourly rate is, how much you charge. And the lawyer turns around and says, well, it's $200, son. And he goes, all right, okay, Dad. And then a bit later on, after the kid had gone to bed, the wife speaks to the dad, the mum speaks to the dad and says, do you know, little Freddie's asked me to borrow $50. He didn't say what for. Do you know what for? And he's like, nah, but I'm sure he just wants to buy some toys or, some playing cards or whatever it is. Like, just give him the money. Like, it's fine. We're doing okay. So they give him some money, and then the next day he comes back to Dad and says, Dad, I've got some money now. Can I spend 15 minutes with you? And it's kind of like, you never want to get to that stage in life where your kid is thinking that your job and your work is more important than earning the money is more important than them. They don't last. They're only kids for a short period of time, and maybe when they grow up and they're out there, that I would turn down. I would take the money rather than the kids. But right now, I prioritise them, and so it takes a lot of money for somebody to turn around and say, "Oh, can you not do that stuff with your kids today? Can I pay you to do this instead?" It's a really big amount. Very little time does that happen. Yeah, exactly.
Very interesting. I think that's one reason we get them, but it's very insightful, and sometimes I think we all need that reminder. So just as you were speaking, and especially that last story, I've heard it before, but I think we should constantly remind ourselves, and it's very. I'm really grateful that you've mentioned it for myself first and foremost, and the viewers as well, which is just that reminder that we need. I think one of the reasons that we get on is because of our similar what I'm doing. I'm very particular, so I'm very grateful for the client base that I do have. Very, very grateful. Really nice individuals and families, and that's how it should be, right? You know how Harvard are talking about this whole blend. Okay, if you want to talk about blend and start to use big words, then it should be that, okay, you're working with the clients that you enjoy working with, because then that's the blend, right? You're enjoying what you're doing. So I'm very, very particular about the clients that I work with. As soon as I see that, there's a potential. Sometimes, the client might be, I'm not saying the client is a bad person. I'm just saying that sometimes that gelling might not be there. And for me, as you say, the money has to be quite significant for me to then, go through that whole hassle, which is, trying to gel and forcing the relationship. So I think that's something where a lot of us, we forget, which is, okay, we start our own business to have the freedom, but then we forget to enjoy the process. And I've heard so many stories whereby, so-and-so has started a business for that financial freedom, for that freedom of life, spending time with the kids.
Yeah.
But they end up growing so quickly that now they have to maintain customer service levels, for example, or keep churning out the work. And then, so effectively, it's like they went in one direction, but they ended up, coming back down and probably worse off how they previously were. I think another point around that is competitors. Now, I have to constantly remind myself, and I do remind myself, that I cannot compete with my competitors because of my mindset, which is life comes first, my happiness comes first. I cannot compete with my competitors. If I do try to compete, to be fair, it's still possible for us to compete. We shouldn't rule ourselves out. But I'm just saying,
Yeah,
generally speaking,
practically we can, but yeah.
exactly. But the one that's, has money as their goal, it's very difficult to compete with them. It is still possible to compete, to be honest. Value-based pricing.
Yeah, absolutely. I understand what you're saying. Like, if money is your only goal, then we can't compete. We're never going to. I'm never going to be able to compete with that.
I'm happy not to compete.
Yeah, exactly. And I think that what I hopefully is the case when I look at, all of sort of my like 5-star Google reviews that I've got, and those clients, they've all left happy as well. And I know from experience that not always do clients leave law firms, full of beans and happy about the service that they've had. But that's the experience, and that's what I want to provide. I want them to go away going, it was a pleasure to deal with Steven. It was really good. The other story that comes into my head, and it was a really fundamental one for me, just about sort of the whole life, work, and growing businesses and that kind of thing. It's American, I think, but the story of a Mexican fisherman, right? Have you heard this one? So there's a banker from Wall Street sitting on this beach in Mexico watching this fisherman, wrap up for the day early, and the banker turns around and says, do you know, with a little bit of planning, a little bit of forethought, you could probably get another couple of ships, a couple of boats, and catch more fish and make more money. And the fisherman was like, oh right, okay. Well, then what would happen? And the guy says, well, they're starting to get excited. And he's like, well, then what you could do is you could probably grow the business to a certain size where you could probably get some external investment come in, you get some investors, private equity come in, and then you could, buy some of your competitors, and you'd be the biggest operator in the marketplace, and you're catching all these fish, and you'd run the market. And then what would happen? And he goes, well, then what you'd carry on growing, you'd get more in, and then one day ultimately you'd be able to sell your business, and you'd pocket a load of cash. And he goes, and then what would happen? And then the banker turns around and says, and then you'd be able to sit on the beach, just chilling and relaxing, enjoying life, and just watching the sunset like I'm doing. And the Mexican goes, so what do you think I'm doing now? and that for me was like, it's a good story, but it's exactly the thing. It's like, if you're just chasing after the next big thing and going and growing and growing and growing, yeah, your bank account looks good, like, well done. But fundamentally, what is it that you actually enjoy in life? And if you ask most people what they enjoy in life is not working, right? So I enjoy what I do, but it's much better not doing it. Spending time with the kids, spending time with family, maybe traveling, or for me, like eating, or whatever it is that people enjoy. Some people like exercise. I don't get on with those people generally, but some people like doing things like this. But if you're so busy during the day that because you're just prioritizing work, you're not living, and that will make you sad, won't make you happy, and it's almost doomed to fail long term. But you'll have a good bank account for it.
Very, very interesting. That story is quite striking as well. Very, very good. I actually recorded a video not long ago. It's been a few months now, but I was making the point, which is that, and it was funny because the reason for recording the video is because at that time, I ended up having 3-4 conversations with different people around this aspect, which is that with money, the ultimate principle is that if you want to increase in your money, so whether that's by way of business or by way of employment. So for example, employment, you're earning 3,000 a month, you want to move up to 5,000 a month, or by business, you're currently earning 20K per month, you want to move up to 50K. The bottom line is the ultimate principle or sacrifice, you could call it, is if you want to make that leap up in regards to money, there has to be something that needs to be sacrificed on the other side, which is either personal relationships, your health, your social life, your personal goals, your hobbies. And there was one more I've forgotten. Yeah. But ultimately, you have to sacrifice one of them. So then it's about having that balance and pushing up the things that you want to do. So for example, there's so many people, they have that personal passion, that goal, that hobby, that the pursuit of that promotion, for example, that will always be left to one side because, it's that whole sort of lever, which is always being pulled. I think it's very interesting to speak to you because you've basically experienced both ends of the spectrum. You are a partner in a law firm running a large number of staff, dealing with the day-to-day headaches and stresses, and a large law firm. I can imagine how that can be. And you've completely taken the degree 10 into the opposite spectrum. So it's very interesting to hear your thoughts and insights. When will this book be published?
The book I've just started writing it, so it probably be next year, in fairness. But it's just and it may not even come to fruition, but just something that's been. I've written a number of books before, but all law books or legal stuff, primarily in areas where there's it's not. I can't justify charging a client. So I wrote a book about small claims, money claims online, and things like that. I've written a book about selling your business, for instance. So all my books are on Amazon, by the way, if anyone wants to have a look. But they were all law books. But I've had this itch for quite a while of writing something that's a bit more meaningful, a bit more impactful, and the stars align or whatever it is, and just realise that actually I think I've got a lot to add into the marketplace about happiness, contentment, and why that's really important as an antithesis to current sort of trends on social media and books about growth and personal well-being. And everyone sees it. Social media course about how to do 10 grand months or how to do 6 figures and all those kind of things. It's everyone's aimed at that. And like without getting into too much detail, I'm a Christian, but I have like that faith belief as well. And so mixing that into the concepts of work and life and happiness, I think that's all more important than just striving for more cash.
Very, very interesting. And we look forward to receiving that book at some point next year. I hope you'll pull through, and it'll be good to have you on the podcast again next year to discuss that book potentially.
Definitely.
In terms of just one last point before we start to wrap up, there was one thing that I wanted to ask you about. Just skip my mind. But no, it's been very insightful speaking to you, and I think we've ended up speaking more about this whole happiness and contentment more than the actual tax and legal aspects of selling a business. But such is life, and sometimes, and as we're saying, work should be it's part of your life. So what we're talking about is technically work, if you get what I'm saying. We're trying to build a balance. And as I say, I think that USP for yourself is the fact that you've gone from one end to the other end, and it's good, it's motivational. One thing that I've learned is I was watching this video not long ago, it's probably been about a few years now, whereby an individual, he was recording the advices of those on their deathbed, so 80 plus individuals, and not a single one of them mentioned that I would have wanted to make more money. All of them mentioned about experiences, spending more time with my kids, spending more time with my families. And you know what? It's crazy because on LinkedIn, I actually wanted to discuss LinkedIn with you as well, bro. But effectively on LinkedIn, I've literally seen posts whereby individuals have come out and written saying, look, today's my last day, I'm retiring. I've worked for 40 years at such and such firm, for example, KPMG or whichever firm. But the bottom line is I read these posts and I feel sadness in my heart because, they've written the post, they've got hundreds of likes, which is good. I'm very happy for them. And then they've got all these comments saying, oh, congratulations or best of luck and this, that. And I'm thinking to myself with sadness that, is this all that person is getting after all those years of service? Some likes, some comments, and that's it. All that time and the rest of it. So it's quite deep when you start thinking about it. And it's
completely, isn't it? I thought it was sad to get to a retirement age and then say, and I've heard people say this, now you can enjoy your life. And it's like, well, do you have to wait until you're 65 to enjoy your life? I'm okay, thanks. I want to do that now.
Exactly. And I appreciate you reminded, because sometimes I've got 2 young daughters as well. And I think it's about making an active effort, a proactive effort. You can't just, sit around and say, yes, work-life balance and my kids come first and family comes first. You have to, because it's very easy to get caught up, right? I don't know about you, but I do get caught up quite easily. Competitors and work coming in, and okay, we're seeing not dollar signs, we're seeing pound signs in our head. Okay, this, and as you say, it's important to bring the money in, because obviously we live in this world and money runs everything. Generally speaking, we do need money to enjoy it to a certain extent. But I think we have to proactively, and that's the key word for me, make time for our kids. And that thing that you do, which is block out time in your diary that's that's quite proactive, which is, it ensures the thing gets done. But I always tell my wife as well. I tell her, look, remind me, if you see me going off track when it comes to getting bogged down too much into work,
Yeah,
remind me, and yeah,
that's good.
hopefully
Yeah,
it will pay off.
that's good. I've got 5 or 10 more minutes if you want to talk about LinkedIn.
Oh, sure, sure, excellent. So yeah, LinkedIn, how is that working for you? How long have you been on the platform? How long, as in, I think a lot of people have been on the platform for many years, but I think the key question there would be, how long have you been active for? And
Yeah,
what
sure.
I
So,
think that's going to be
not
as well. Yeah.
yeah. So my LinkedIn journey. So I've been on LinkedIn for quite a while, and I remember that because when I left my first job when I qualified as a solicitor, there was one thing that was really sticks in my mind. So I met somebody in the city centre. There was a client, and the usual kind of, oh, how you doing? Yeah, you keeping busy? And I said, yeah, keeping busy. And this guy turned around and said, yeah, busy on LinkedIn. And at this point in time, it was like 10 years ago, or maybe even 12 years ago, I was like, busy on LinkedIn? What's he on about? I don't really use LinkedIn. And at that point in time, I might have gone on it once every week or once every 2 weeks kind of thing, which is most people like just when they're a bit bored or whatever and have a quick look and maybe post something. I wasn't really using it at all. And I came away and looked at his profile, and at the time, they don't do it now, I don't think, but at the time, LinkedIn would send you a weekly email of what's happened on LinkedIn. And this guy had a handful of connections, but not many, and obviously none of them were doing anything. So he was getting a weekly email from me going, Stephen's done this, Stephen's done this. And that made me realise that actually there's some power in that visibility. So that was the starting point. I didn't really get too into doing LinkedIn until really I sort of set up my own business, but maybe a little bit before that in terms of the planning to set up my own business. But really kind of sort of launching my own business. By that point, I had quite a few followers on LinkedIn, and the announcement went pretty well. And since then, it's grown. And I now spend more time on LinkedIn than I do on networking events. Generally, sort of face-to-face networking events, and because I get a return on the investment of time. Return is in a few different ways. Return on building relationships, that's really important. Learning and improving oneself, that's really important. And also cash, the bottom line is, that I've had work from it. And it astounds me how work comes. So this was probably maybe been the first year of me setting up. I had someone contact me on LinkedIn for a job. It wasn't a particularly big job, a small job, but it was like a couple of grand of a job, right? And so I said, as I do to clients, where did you find my details? Where did you get my details from? LinkedIn. I was like, right, okay. Don't recall like seeing you. We connected or anything like that. And I look into it, and we're not connected. And I said to her afterwards, you mentioned you found me on LinkedIn, but we're not connected. I'm just wondering, what happened. And she says, well, I went onto LinkedIn and searched for solicitors, and then your profile came up, and you look like you knew what you're talking about. And I was like, wow, because I thought people would search on Google, for instance, but this person, just her starting point was LinkedIn because she, wanted a sort of a professional, a trusted professional. So I was like, that's interesting. Go on.
Was this a few years ago, or was it recently?
Yeah, so this was a couple of years ago now,
Oh, wow.
and really kind of so really before I then started doing it, and then since then, and probably since the first year of me starting, I'm now to the point where I'm posting daily. I'm interacting, engaging with posts and leaving comments. I probably Apple screen time tells me I spend at least an hour a day on it. So I'm pretty in on the time commitment to it, but I've had a really good chunk of work out of it, consistent and regular work from people that I've not met face to face. I might have had a Zoom call with some of them, but most of the time they just see me and they go, Stephen, you can do this, can't you? And I go, yeah, of course I can. And they're coming to me because I had one that was, what was he doing? That was an MBO, and it was for quite a decent fee, and he'd basically found me on LinkedIn, followed me, and he said, I've been, following you for a few months on LinkedIn, and I really like your, your personal, you don't take life too seriously. Obviously you can see that you know what you're doing, but also that you're enjoying life and that mixture and of all my kind of posts about life and happiness and enjoyment and food and all that kind of thing. And he's like, I think I want to work with you. And so he said that my fee quote was higher than the other quotes that he'd had, but actually he'd already made his mind up that he wanted to do that work with me. And that just is music to my ears, because it's like, that's exactly that's what I want. They're the kind of clients that I want. Go back to the talk on happiness and niching and all of that. And it just, the phrase, I've got one friend of mine's a copywriter who doesn't like the phrasing, but being authentic, right? He says no one can be authentic because you don't ever post yourself in pictures of being in your pajamas sitting on the sofa watching EastEnders, but being true to the self, and that's what I am, and just it's who I am. I'm no different in this call than I would be on a call with a client. I'll still tell a joke and still make a smile, and LinkedIn's no different, but it works, and what it does, I think, and I hope, it filters out those people that I don't want to work with, because there'll be some people inevitably that will look at it and go, he's not very professional. He's like, they'll inevitably, and they will want, the pinstripe suit and tie, glass fronted offices. They want that, and in which case I'm not the lawyer for them. That's not for me. We won't get on. We won't gel. And if they've already made that decision, that's brilliant. And yet, if someone's made the decision that they like the fact that I'm a family guy, that I'm honest, that I'm happy about life, that I'm not all work related, but I can do these important jobs as well, then I've hit the target.
Very, very interesting. It's quite interesting that you've been seeing results from a few years ago, because in my head it was LinkedIn has really kicked off just in the last 1 or 2 years. That's my.
Certainly has, yeah. Yeah, I'd certainly agree with that as well. Yeah.
Oh, okay. But that's quite good. It's quite interesting, and it's very insightful in terms of when you say your post effectively weeds out those that you don't want to work. They don't want to work with you. That's fine, and you don't want to work with them. And then you're already streamlining your who's in the room technically, as in technically.
Basically, yeah.
So that's quite interesting. That's very good. And I do follow your posts, and very insightful, and as you say, relaxed, nothing too serious. Sometimes I think as well when I post, as in rarely, I just like to be myself, and if someone doesn't like it, then it's up to them, right?
Yeah. Yeah, exactly. Yeah, that's it. Yeah, can't please everybody. That's the thing. Like you can't, and it'd be really false and disingenuous to try and pretend to be something else. I kind of probably did that in the past to try and appease everybody and appease partners and try and take on clients that weren't a right fit. But that's employment. You probably have to do that because you're being paid to do the job. But as a self-employed, setting up your own business, you get the freedom of choice. You can pick and choose, and I can work with the clients that I enjoy.
I think that ties in quite closely with the whole happiness thing that we've been discussing, which is, if we're working with someone that we're not too comfortable with, then are we really happy in that relationship? So, I think everything comes round in a circle. But yes, as in there have been the 1 or 2 occasions where I thought, okay, if I put this out, then I know for sure some people are not going to be too happy with me, and I'll lose a potential client. But I still put it out because, as you say, I'm not here to impress anyone. This is a free world that we live in, and each individual human being is different. So if one is to expect, as you say, everyone to like you, it's never going to happen. And once you get that into your head and, be firm and content with that mentality, then I think you'll flow more naturally and you'll attract the right individuals into your room.
The other point on it actually is a data backed point, which is, in my experience, when I've done posts telling about what I do, like the more professional posts, they get a lot less engagement, a lot less likes and views than I would do if I was putting something that was a bit more jokey or a bit more personal on. Now it's a mixture of the two. So obviously, if someone was only ever putting jokey personal stuff on, people would probably wouldn't take home what it is that you do, and therefore you wouldn't generate work. So you've got to mix in the work stuff, the serious stuff, the reviews, the testimonials, the case studies, and all of that. You've got to mix that into the social media feed. But yeah, definitely in my experience, the more personal ones or the more jokey ones or the discussion ones around something that's, it's a key business thing, they're the ones that do better.
So effectively, sorry. So are you saying that just to clarify, the business post, as in something very informative about your legal services, or in my situation, a particular transaction when it comes to the tax implications, we're saying that those posts will get less engagement.
Yes.
But the other posts, the very personal posts where like you're on a beach and you're talking about your random thoughts, they end up getting more engagement. Is that correct? Yeah, effectively.
Correct. Yeah,
But as I
correct.
say,
But you need both.
I
You still need both. So if you only posted about beaches, for instance, people would go, "Oh, what, that guy's on the beach all the time," and wouldn't think, "Oh, that guy who knows his stuff about tax." So you need to mix them together. But I'm probably on about 75-25% now. 25% being the business side of thing, the more informative posts, and 75% being the less, something like that. Because like maybe one of my posts a week would be about what I actually do, and then the rest is something else.
Very interesting. Good stuff. Excellent, Stephen. A pleasure to have you on. We've all learned a lot from you. I've definitely, the reminders as in if we just have a quick recap, we discussed how your current position and your previous post being a partner of a law firm. Then we discussed the legal services that you provide, and we sort of niched down in this episode. There are tax implications that need to be considered. There's a lot of tax planning opportunities, and that's probably, am I right to say that's the work you predominantly get involved with, as in that's the bulk of your
Yep.
work? So
Yes. Yeah.
selling a business, we understood the process of the lawyer's position when it comes to selling a business, and how a lawyer can help business owners sell their business, and also how a lawyer and a tax advisor can work with accountancy firms, with the accountants of the business owners. And then we moved on swiftly to the life-work balance, as you like to call it, which I found very, very insightful, and I think the audience will as well. Sometimes, as I say, it's just a reminder that's needed. It's not, people know
Yeah.
what they want, and the natural human disposition, work is not life. As in, I can't be doing this all my whole life. So sometimes we just need the reminder. And then we discussed LinkedIn as well, which was insightful as well, hearing your experiences. A pleasure to have you on. And as I say, next year, this time, we'll record another episode discussing your book. So the pressure's on.
That's accountability, isn't it? Omar, thanks very much for having me on your podcast. I've really appreciated it and really enjoyed it.
No problem, anytime. And for the viewers, don't forget to like, comment, share, and subscribe if you're watching on YouTube. And we shall see you in the next episode. Speak to you all soon. Cheers, Stephen. Catch up soon.
Thanks.
Have a great
Bye-bye.
day. And I'll sort of cut it out at this point. But
Okay.
yeah, have a great day, and I appreciate your time. I hope
Thanks very much.
you engaging as well. I hope I went to
Yeah, definitely. Yeah, it's really good. Really good. It's so I was doing some podcasting in the first year or two. Just so during sort of the pandemics, I brought out a podcast called The Business Herald, and I did a weekly podcast on business news that would affect small businesses, basically. It was possibly one of the most enjoyable work things that I've done. Really, really enjoyed it. But just as I got busier, something had to give, and realised that doing a weekly podcast was quite intensive. So when I first started doing it, I thought, well, I'm reading the business news every day anyway, so we'll just talk about that. But actually, it become difficult reading the news, and then being able to talk about it is a different thing. And then being able to analyse, you've got to read it in a bit more detail. You've got to actually read the report, not just the headline or whatever. And then finding guests that could come on and talk sense about those things as well was a bit tricky. So, and there's nothing worse than asking a guest and they go, don't really know. Okay, that was fell flat. Thanks very much. So I can't remember how many I did, but probably about a year's worth. And it was going pretty well, and the viewing numbers were going up. Never got a drop of work out of it. And then I decided, you know what, actually, I'm going to stop doing it. I was doing it on Fridays, and I thought I'm going to stop doing it, mostly because of the time aspect. Something has to give, and I want the time, so I dropped that. A few weeks after dropping it, I had a phone call from somebody that said, I've really enjoyed the podcasts I've listened to, and I would like you to do some work for me. Okay, that's the
Oh, wow.
chances. Yeah, which is, that was great. But the point is, I really enjoyed doing the podcast. I hope you are as well. I think I can tell that you're enjoying them, and as you do more of them, you get better at it, and you settle in, and like the things to say and those questions to ask to get a good response out of people, and so just kind of keep at it and get more under your belt, and yeah, hopefully you're enjoying them as well.
Yeah, no, for sure, for sure. I think that for me, that it's the time issue. So I've had this idea
Mm.
for a long time, probably 2 years. I've had this idea since I started my business. I probably thought, yeah, I need to do a podcast, but I'm doing it now. I still don't have the time, but I do make the time, and I think it's about priorities, right? Is it alright if we keep
Yeah.
this bit in the podcast?
Yeah, if you want. Yeah, of course it is. Yeah, sit up
Well,
straight.
I've moved the mic, but who cares? But yeah, no, I do enjoy the podcast, and for me, like I always have this mindset, which is that I want to learn first, so at least I know it's not a waste
Mm.
of time. If that makes sense. So, for example, your
Yeah.
reminders today, uh, we all need it, and that's something that we should always keep in mind that we all need that reminder. It shouldn't be that I know everything and that's the end of the matter. No. So I do enjoy it. In terms of being consistent, I've never promised consistency, which is weekly. I
Yeah.
can imagine how difficult that is because
Yeah,
um,
it was too much of a burden. Yeah.
yeah. So for me, it's like if I can get one out once a month, then I'm sort of content. Probably push that to twice a month if I can. But like for example, today this whole Riverside thing, I just paid for it today. I've never used it before.
Okay.
It's completely
Hmm.
freestyled it.
Okay.
Even the lighting, I don't think my lighting was too good. As in, if your lighting was perfect, but my lighting, I don't think it was too good. Now it's starting to look a bit
It,
better.
it,
But
it looks okay, but you could definitely do with the light in front of you, I think. Yeah.
yeah,
Like maybe like if you got a window in front of you, is there a window to your left?
to my left, yeah. So should I face
Yeah.
the window?
So I can just about where the lamp is, you can just about start to see that light. So it might be a good idea to
Yeah,
to move where you are so that that sunlight is coming in on your body a bit more.
yeah. I need to play around with it. But yeah, I was quite
Yeah.
unprepared because of the whole time issue. But appreciate your patience at the
It's all
start.
good. I think it's one of the things I've realised, since the whole pandemic and working from home and Teams and Zoom calls and that kind of thing, is that I'm not sure people worry that much about all of that anymore. I think there's a time and a place for sort of that, like your website, it's got to kind of be a bit slicker and a bit more professional than. But I think on a day to day and a podcast, I don't think they're looking at me in a polo shirt going, look at him, he's wearing a polo shirt. I want my lawyer to be wearing a suit. And if they are, that person is thinking that, then they're not the right person for me. And so I
Exactly.
think this the same thing. I'm like, if someone's going to criticise what I'm wearing, then they're not the right client.
Yeah,
So
yeah.
it's fine.
I actually had a client that so I had the initial phone call with him. It was a paid phone call. It was introduced by another accountant, and it was yeah, two individuals on the phone call. And after the phone call, imagine like I gave them so much free advice. I would never really and truly give that much free advice on. Yes, it was a paid phone call, but I was like literally going above
Mm.
and beyond. We were engaged to discuss a certain thing. I really went out my way to discuss other things as well and gave them ideas. And anyway, the accountant, did he leave me a voice note? I've got a good relationship with him, so he left me a voice note, I think. But he said they were they weren't too happy that I was taking the phone call in a cafe. And for me, it was like, I've got way bigger clients than you. Like, you're on the smaller level
Yeah.
when it comes to clients. And I've taken phone calls in the same cafe with the larger clients, and they've never had a problem. And, for you to criticize me
Mm.
saying that I'm unprofessional, they literally said I'm unprofessional for taking the phone call in a cafe. And I think for me, it was just like the accountant was Alex. I said, Alex, look, and he wanted me to continue the work because he said, yes, they're happy with the advice that I've offered and they're happy to go forward. I tell him, look, Alex, I know you've got the relationship to manage, but I'm not interested in taking this relationship any further. If they're going to criticize me for something like that,
They're gonna be problems down the line. They're going to
what
be
did
something else, aren't they? Yeah.
there be something else exactly? So
Yeah.
yeah, no, but it's
Yeah.
very interesting.
And that's the good thing, isn't it? Having your own business gives you that freedom. But people don't always do it, particularly when they're just starting out, because you need the money more than anything else. People sometimes take on work that they don't really want to do, and so I appreciate that. You need to get to a certain level where you can say, do you know what, I don't want that. I don't want that kind of work. But I think fundamentally, going back to the whole happiness piece, I think the reason for most people, the reason why there's always a reason why they set up their own business. Yeah, and it's because they weren't happy at work, or they wanted to work more flexibly, or they wanted to spend time with the kids, or they wanted to earn more money. Whatever it was, like, you've still got to have that as your kind of focus. For most people, setting up business was because they didn't want to be constrained by employment, and they wanted to do things differently and do things their own way. And you've got to remember that, and I think you've got to apply it and consistently check on where you're at and going, is this meeting what my objectives are?
Yeah. It's that whole proactivity in terms of accounting for yourself, proactively instead of passively. Then everything else just takes over, and I'm really doing like that. So, but yeah, pleasure to have you on. Just a quick one. Your podcast that you used to post weekly, was it a video podcast or audio?
I did. Most of it was audio. I did put some on. I did put some on YouTube. I found it a lot easier to edit the audio than edit the video. So editing audio is dead easy, and I've done it outside of podcasting before. But you can see the wave lengths or whatever it is, and so you can see where somebody says something, and you can then cut it out and fix it together. It's just a bit more difficult to do it on a video. So I pretty much only did audio, and then sometimes did some videos on a special occasion, but most of it was audio driven.
So what should I type in? Should I just type in your name?
Yeah, on YouTube, yeah, Steven Mather should come up, Steven Mather Solicitor, and they're all on there somewhere.
Excellent. Pleasure, Stephen. And
likewise, my friend. Yeah, thanks very much, and have a good rest of the day.
If there's any tax advisory pieces that need looking at, then happy to get involved.
Always,
team as well, and likewise, I will keep your services at hand for sure. There is a potential piece of work coming in on a £12 million sale of a business, but the only so obviously I would have naturally thought about you in terms of the legal aspects, and I will, if there's a sort of angle that I can introduce you, then I will. But it seems like the accountant is sort of, as he says, I'm setting up my advisory team, so it seems like he's already got someone in each field. But we'll see if there's asked for a recommendation. Something like that.
And at the end of the day, with people like that, I'd always just go, look, is it worth just getting a second quote on things? So,
sure.
I'm happy to do that, and it might be more or less or whatever. Money might not be the key thing, and if they're happy with the recommendation, they're happy. Like, as long as they know they're getting good service. I usually would say that is it a good idea to get a second quote? I do know that Stephen does fixed fees, and a lot of firms don't do fixed fees. So just make sure that the firm that you are using are giving you a fixed fee, like I am. Do you know that kind of scenario? Because that just gets people thinking, going, well, yeah, actually, maybe, yeah.
Yeah. No, for sure. I'll definitely get that under, and then we'll take it.
Perfect stuff. All right, good. Have a nice rest of the day. Take care. Look after yourself, and we'll speak soon.
Take care. Pleasure.
All right. Cheers. How do I get out of here, though? Is there a button? Leave. There we go.
Leave.
Yeah, I've got a button that says leave. All right. Take care. See you soon.
Okay, cheers.